Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, thank you for making time today.
Happy to be here.
So stocks on Wall Street were up last week despite the coronavirus. The question is whether that'll continue this week. What's the story in the Korean markets and stocks globally?
Okay, well, Korea market, we had a sort of a mixed day today. Kospi went down by 0.06%. Kosdaq went up by 0.53%. The Asian markets seem to be having mixed results as well. The Japanese market was down about 0.69%. Chinese market, it's not finished yet, but they're both the Shanghai and the Hong Kong markets are going upwards. And then the U.S. market, they're not open yet, but looking at last Friday's numbers, most of them did fairly well, not only on Friday, but the week overall. And the European market, the Euro 50, went down 0.2% on Friday because of Brexit and German slowdown worries. So the U.S. market seems to be the only one that's doing consistently well. Over the last week, the U.S. market, the Dow went up by 1%, S&P went up by 1.58%, NASDAQ went up by 2.2%. Now, the reason that the U.S. market is going up is because, well, they're the only major economy whose economy is on a healthy growth trend. But also, more and more people are beginning to become worried that the reason that the U.S. stock market is doing very well is because of ultra-low interest rate that's been continuing for a long time. And this is the dangerous part. The market may believe that the Fed may bail them out of any potential dangers, in which case this is really an environment that's ripe for a bubble. So more and more people seem to be worried about possibility of a bubble taking place.
Yeah, everyone's saying that's the only place left to put your money is in stocks at the moment. But we also see in other news, Korea's trade surplus with the U.S. in goods has risen by 15%. Still, Korea went down on the list of countries with which America has a trade deficit, down to number 14. What do you make of that news, and what stands out to you in particular?
Okay, well, let's look at it first from the U.S. point of view. The U.S. trade deficit fell for the first time in 6 years. It fell by 1.7% to $606.8 billion. That's about 2.9% of the GDP. Both goods imports and exports dropped. So this is not a signal of a very healthy economy, but rather the fallen exports probably reflect the fact that the global economy is not doing very well, and the fallen imports probably is due because of the tariffs that President Trump has put on not only China but many other countries as well. Now, the problem comes partially because, well, for Korean side, one of the reasons that the trade surplus went up may be because we're taking some of the Chinese demand. The United States has to import some of these manufacturing goods from elsewhere, and Korea may have been one of the beneficiaries. President Trump, I don't think we'll be satisfied with these numbers. Even though the trade deficit went down and he'll probably be taking credit for it, he still doesn't like the fact that U.S. has a trade deficit, and one of the countries which has a lot of trade surplus with the United States is Korea, so he'll probably use these numbers to pressure Korea rather than lay off. From Korea's point of view, exports to the United States went up by 0.7%. It was led by automobiles and automobile parts, but household electronics did very well as well. That's despite the U.S. tariffs on washing machines. And then Korean imports for the United States went up by a large degree, surprising degree, and a lot that was basically led by crude oil. Crude oil imports went up by 99.7% compared to last year, and that partially is because of the problems in the Middle East, as well as pressure from President Trump to import more from the United States. And again, I don't think this is enough to pacify President Trump. I think he'll use these numbers to keep pressure on Korea to import more from the United States.
Well, now, Dr. Young, the spread of the coronavirus is clearly going to hurt the global economy to one degree or another. What's your outlook in that regard, and what kind of events are coming up economically?
Okay, well, we've been seeing a lot of sort of a roller coaster ride on the COVID-19. Any bad news means a very rapid decline in the financial market as well as the real economy. Any good news seems to be bumping things up. So we're seeing perhaps a lot more of a roller coaster ride than it's warranted. But some of the interesting statistics that we should be looking out for this week should be the for Korean side, consumer household income trend comes out on Friday from the statistics office. We probably know most of the salient trends, but still, it'll be nice to see whether they'll be confirmed by official figures that consumer spending income has gone up, but not enough to perhaps lead the recovery. And then on the foreign side, the United States Fed, as well as the European Central Bank, has their monetary policy meeting records, the minutes coming out on the latter part of the week. It'll be interesting to see what their monetary policy makers feel about the current economy. And then the Purchasing Managers Index for manufacturing comes out for various countries, U.S., France, Germany, and U.K., also on the latter part of the week. It'll be interesting to see how the manufacturing industries in these countries are going on the European side because of the Brexit and the slowdown in the German economy, and on the United States because, well, as I said, they've been growing at a healthy trend, but their major weakness right now is in the manufacturing sector, so we'll see whether that trend is continuing or whether there may be signs of recovery.
All right, Professor Young, we'll have to leave it there for today. Thanks so much for sharing your insights. We appreciate it.
Thank you.